All right, thank you very much, everybody. We've been wanting to do this this style of presentation for quite a long time. We're happy that we were able to invite and have so many speakers here, the partner companies here, and everybody who participated. So thank you very much for joining us. So forward-looking statements. So this is technical difficulties because we're trying to be a little bit fancy with the voting cards and looking to highlight assets that you guys want to talk about today. So I will be making a lot of forward-looking statements, not only from Osisko's point of view, but I'll be talking, walking in the shoes of our partner companies. Most of the intro information are taken right out of our asset handbook. So we have, if you want more information, please refer to the asset handbook, which has all the underlying assumptions into the numbers that you'll be seeing. But I'm also stealing slides from our partner companies and using those directly. The link is at the bottom, so you have the information that you can follow through there. Next slide, please. So the platform. So my duty here today is to talk about our existing assets. Mike and Ian are going to talk a little bit more about our growth and the way we're approach to growth as we go forward as Osisko Gold Royalties under the with Jason. And so we have a very deep portfolio. So in here, there's 42 assets that I gave the option to talk about. We have 160 in total. And I like to say that, you know, even if our head office moves to Mars and the whole team is put into hibernation during the trip, we should wake up and open our laptops and see 5-10 years later that the growth profile will have increased. Thank you. Just naturally, just based on the fact that we have so many strong, important development assets built into the profile. One of the leading indicators of our growth is drilling. So we compile this every year. Over the last 6 years, on average, we've seen around 1,000 kilometers of drilling. There's a lot of work that goes into compiling this information. It's a great leading indicator because to build resources, to go through the technical studies, you need to do the drilling, and we have partners that are very aggressive in their drilling. So if you take the sum of those 6 years, assuming $250 per meter drilled, that's about $1.5 billion that's spent on our properties, which is a massive investment of which we don't have to outlay in the future. Another great leading indicator is the number of technical reports. So Elijah put together this information taken from S&P Global. So it's essentially all of the technical reports from the royalty companies, including Osisko on the far left. In gold is the feasibility studies, in black is the PFS, and then in the light gray are PEAs. So you can see we're comfortably in second place among all of our peers. And 2022 was a pretty stellar year for our partner companies. We have 10 feasibility studies that were produced on the properties on which we have royalties or streams. We'll be tracking this. We'll be continue to tracking this, but just that wave of those feasibility studies, those projects are going into permitting. They're going into financing, and we should see continued advancement of those assets. And these are our attributable ounces. So these are basically ounces that are eventually owed to us at some point. As opposed to some of our peers, we actually net out the transfer payment for streams. So these are basically 100% payable ounces. And year over year, we saw between 22 and 23, an increase of close to 900,000 ounces in reserves. So for example, if we have a million ounce deposit and we have a 1% royalty, that's only 10,000 ounces that are listed here. So that 3 million ounces is quite substantial. And then the hashed part on the top of the histograms are purchases from last year. So for example, Cascabel is helping to grow that number, but it's a relatively small proportion compared to the overall picture. Speaking again to the strength of the overall portfolio. So in the first category, we have the cornerstones. So I don't really want to talk about these because these are things that we market quite a bit, and you've come here to learn new things. We have assets like Sasa, located in North Macedonia. It's a lead zinc deposit with on which we have 100% silver stream. The asset continues year over year, providing 3,000, 4,000 geos for us. And this is the nice background production that we have going forward. But I do want to talk about Malartic, which is our most important asset, and Island Gold. So Malartic, finally, as Amar likes to say, is transitioning from Canada's largest open pit gold mine to Canada's largest underground mine. The surface shaft infrastructure is complete. The shaft is being sunk. They're ahead of schedule in terms of deepening the ramp, and the throughput of the first Odyssey zones is reaching what they were hoping to achieve. So we're happy with the progress that we've seen so far. And this is the most recent histogram of the production of Malartic underground. All of Malartic in gray, you can see the open pit tonnage or ounce production. And the royal blue in the center, that's East Gouldy, which is really the core and the driving engine of the underground at Malartic. So the update, basically what we've seen is they've added 3 years on the back end of the mine life, and that's driven by additions to East Gouldy. So as East Gouldy grows, they will convert more resources into the mine plan. So East Malartic and some of the tonnage from the Odyssey deposits are not being brought into the mine plan. Around only half of the resources are actually in this histogram. So as East Gouldy grows, we hope that we're going to see an increase in the mine life. And so one of the aspects of what Agnico is talking about is on the bottom bullet here, opportunities to further enhance production profile from 26 to 31 using the internal zones. So I'll explain a little bit what they mean by the internal zones. So this is a long section and a cross section of Malartic. So this is Odyssey South, Odyssey North, and the internal zones are located inside here. East Gouldy in blue, and they will be expanding the resources on either side of this. And this is what we like to call the first shaft, because Yamana had been talking about, and we were a little bit sad to see Yamana go to sell their half of this, because they were really cheerleaders of expanding and talking about the potential for a second shaft. But we were happy to see that Agnico has sort of picked up the ball for us and is actively talking about the concept. So this is from earlier this year. The concept of a second shaft is brought forward. You can see the tonnage and grade, the potential there. So for us, this would be a really meaningful uplift in terms of production. 10 to 15,000 tons per day of additional production at 2.5 to 2.75 grams per ton. It's early days, and they've put it fairly far out in the calendar, but this is a nice upside potential for us. So this is an illustration of the internal zone. So again, the internal zones are within the pink rocks. They're very hard to show, so it's very cartoony, the image on the right. But the image on the left, you can see Odyssey South, which is within the hashed lines here. And then you see the parallel zones that are to the right of that are the internal zones. So they're a little bit more difficult to model in 3D. So they were apprehensive about adding them to the resources and reserves. So even today, the internal zones are not tabulated anywhere within Agnico's resource and reserves. And this is a good example where they've actually added, they've widened the stope at the top with an increase of tonnage of 52%, as well as the grade uplift. But you can see the zone a little bit further outbound actually could be a stope on its own. So there's two different opportunities here for Agnico. One is to just take wider zones where it makes sense, but potentially also take separate series of stopes. So in that line, they've actually changed the mine design with that in mind. So in the top image, you're seeing a plan view of one of the mine levels where they're mining transverse into Odyssey South. And they realize that in certain cases, this puts in jeopardy the mining potential of some of the internal zones. So as they go deeper, they've actually switched around the orientation, and they're going to be going from south to north and providing them the opportunity to maximize production from the internal zones. So I think I have a lot of material to get through, so we'll leave the questions to last. We've reserved 15 minutes at the end. I'll ask Grant to give me the hook when we're running out of time to make sure we have time for that. So Island Gold is the other big project where they built a shaft based on a preliminary economic assessment. In both cases, they're like geological anomalies, very strong underground potential here as well. And so last year we got 2,500 gold equivalent ounces from this asset. Alamos has been a superb partner in this asset, very aggressively drilling it over several years. And we have a 1.38 or a 2% or a 3% royalty on this asset. And I'll show you a little bit where those sit in space. This is the most recent preliminary economic assessment. So historically, this mine has produced around 100,000 ounces per year. But as they deepen the shaft and increase the capacity of the mill, they are going towards 250 to 300,000 ounces a year. So that's a big uplift naturally. But additionally, and I'll show in the next slide, they are migrating towards higher royalty coverage for us. Excuse me. So this is the typical long section that Agnico shows. Alamos. They are also drilling, and they've intersected a lot of zones in the hanging wall and footwall, and they're increasingly talking about these opportunities. So you can look at the image on the right and think of it as a subvertical, typical orogenic gold structure. And then on either side of that, there are zones of mineralization that are either oblique, parallel to the main structure. Last week, there was a new press release which outlined very good grade and continuity in those. So there's an opportunity for them to add, because they're adjacent to existing infrastructure, to backfill the early years in the production profile ahead of the big ramp that we see there. So we're keenly keeping an eye on that. And in terms of where our royalty sits, I've just, in a cartoonish way, shown the distribution of a 3% royalty. So historically, or in recent years, they've mostly been producing in the center area where you can see the orange. So the orange is reserves. In the blue, they're inferred resources that are in the mine plan. So the center area is typically your 1.38. And sort of in the periphery is the 3, and there's a couple wedges of 2% royalty. So as you can see, the shaft, sorry, the laser doesn't work here. So the shaft is sitting, so we're gonna go with it here. Can you hear me? Yeah. All right, let's do this. So the shaft is really looking for the highest grade. So the center of gravity of ounces going forward is really pulling towards our 3%. And if you remember where the highest grade results was quite a lot of work was going on in this area. So we're keen to see the depth of the shaft. They continue to use a dashed line. So there's potential to get deeper and access more tonnage. And then the arrows are sitting nicely within our 3% royalty ground. So those are producing, or the main producing ones that I spoke about, but some of these are smaller. We don't speak about them very much, but there's a nice upside potential that I'd like to describe. So we did get quite a lot of votes for Bald Mountain. So this is a Kinross asset in Nevada. Very typical heap leach open pit asset, relatively low grade, and they're showing only 2 years left of mine life based on the existing reserves. And recently, this is a slide from September, so they are showing some potential of expansion beyond. So the reserve is shown in the darker color, and the potential resource life shown in the lighter blue. And you saw in the press release and the quarterly, they did describe at Round Mountain expansion project S and X. So I hope that we'll see a similar series of studies for Bald Mountain and looking for expansion. This is a relatively older map of the different deposits at Bald Mountain. So in the pink outline is 1% GSR, so it's a gold smelter royalty, whereas in the black, it's a 4% gold smelter royalty. And currently we're getting paid, last year we received around 900 ounces, gold equivalent ounces. I'm just going to go back to the podium, so if you want to turn off the lapel. Check. Yeah, just going to go here. I think it's better sound. Yeah, so we're hopeful that they'll do another study and upgrade some of those resources. So we don't have any insider information. You can see a lot of the deposits are sitting on ground that's neither covered by a 1% or a 3%. So depending on what the studies show on the relative economics, it's impossible for us to see through it. But we hope that some of that teal turns into some dark green for us next year or soon enough. So Kirkland Lake is kind of a complicated story for us. We have two separate royalty amounts on the project. There's several names that Agnico uses to describe the deposit, so I'll try to elucidate that. In the image here, we see shaft number 4. So this is the brand new shaft that was sunk and completed this year. And this is a sort of the more regional map. So the darker gray, that line there basically outlines the original Osisko mining, which was Queenston Mining. Those claims, when the original Osisko was sold to Agnico, those were amenable to a 2% royalty. And in the pink blob there, it's what we call Macassa TH. So Macassa is currently paying a royalty to us. And I have the table of resources on the right. So what's described as reserves and resources in Agnico with respect to this asset is very difficult for us to figure out what is covered and not. So I left out the reserves that are describing by Macassa, but there's a portion of the remaining resources and the indicated inferred, which is clearly on our claims. AK is just south of the pink. And Upper Beaver is in the upper right, and we'll talk a little bit more about that. So this is the typical long section that Agnico shows for Kirkland Lake. In the background is similar to Island Gold, a vertical orogenic gold deposit. 45 million ounces was produced here over the years, and you can see at the top the different names. So each of one of those was a separate mining company that had their separate infrastructure. And over the years, those have been merged, and Agnico owns most of these now. And we had on our books a royalty called Tech Hughes. And a couple of years ago, I'm like, I need to know what this is and where it sits. And digging and scratching, I figured out, well, obviously it's in Kirkland Lake, but where does it actually sit? So we hired a consultant to figure out where the claim names are. It's a very historic document with old patent numbers and such. It's quite difficult in Ontario to figure it out. So she provided us with a map. I had a discussion with Kirkland, with Agnico Eagle. Can you tell us whether any of the resources are falling on those claims? And they said, well, actually, just recently we've started working towards those claims. So what you see in the pink here is a 1% royalty, is the Macassa TH. So this is one of the new operators on our our operating list of producing royalties. And you can see the position of number 4 shaft, which is on the boundary with those claims. So coming back to this royalty, the long section. So it's hard to, it's not a perfect match, and I've put it in dashed line and semi-transparent for a reason, because the corridor, you can see, due to the unusual shape, it's hard to see what's covered and what's not covered. The red patch that you see there is the SMC zone. So if Kirkland Lake Gold for the past decade have basically been producing out of that SMC zone, which is not the main break, which is the vertical series, and this one's a little bit flatter dipping, and this has been the bread and butter of the Macassa mine over the years. So you can see the position of the shaft number 4 if you look on surface, down to depth, and the approximate location of that Macassa TH royalty in pink. And you can see the reserves are in orange again, and the resources are in that teal color, and part of that SMC zone is now dipping onto our property. Also, you can see different levels of exploration drifts that they're working on, so I'll just point them out. 3410, 5807, and 5360. So those are exploration drifts. They're moving towards the claims, or moving through and towards the claims that are the Macassa TH. On the left here, we have at the top left, we have the AK zone, Amalgamated Kirkland. So there's a small reserve there, and also resources. Agnico is going to be producing there next year, most likely. They've actually were forced to put in 2 drifts to access the zone, mainly because the deposit is sitting under the FedEx building in Kirkland Lake. So they couldn't put a ventilation raise there, but that gives them a lot of flexibility to increase throughput if that makes sense eventually. And the exploration potential at depth at AK is quite good, and it's covered by a 2% royalty. And if you look on the far right, there's 2 sort of dashed line zones of the 2% royalty. And those are, if you look at the weird shapes to the northeast or the upper right, the main break and the contact with those. So there's intersections there where our 2% royalty covers that main break area. So we're hopeful that those zones will become interesting. And to note also, in the background, you see the light gray drifts and old stopes. These were mined in the 20s, 30s, 40s, 50s. A lot of these mines closed due to mechanical failures or difficulties or technology. The potential to intersect and push these deposits at depth is very high. Those are extremely high grade zones. So we're hopeful that they discover. They have put out a few holes on that horizon. There's a 14.7 gram per ton over 3 meter intersection there. So we're on the lookout. It's only 1%, but given the very high grade nature of that style of mineralization, we hope that they're going to be expanding in that area. And then beyond that, if we zoom out, the Upper Beaver is in the upper right part of this map, along with Upper Canada. Upper Canada has 1.7 million ounces in inferred resources and 700,000 in indicated resources. It's a combination of an open pit and an underground. Nobody talks about it. It's sitting there on the books, and it's kind of we're hopeful that more work gets done. But first, Upper Beaver. So this is a document that was deposited for permitting purposes in December 2021. So you can see a small open pit with a shaft and drift to get to access to the deposit. So it's gold plus copper, mostly gold in terms of payable metals. And there's quite a lot of engineering that went into tailings and waste rock and everything. But Agnico is sort of rethinking everything about all of the assets within the Abitibi, including this asset, and considering sending it east either to La Ronde or to the Malartic Mill. This is a timeline that was in the presentation for permitting, and they're showing production as early as 2028. However, in the most recent press release, Agnico is sort of guiding towards 2030 or later for Upper Beaver. And again, Upper Canada sitting there parked for now. But if Agnico builds the infrastructure, the rail sidings and everything to ship ore into Quebec, into the mills with latent capacity, it sort of changes the picture for deposits like Upper Canada. And there's several other deposits on this regional property. It's a poor fit for Macassa, which has been full forever. It's a relatively small mill, so this could make sense as a possible candidate one day to get into production and use that latent capacity in the Abitibi. This is a map that Agnico has been showing, listed in the bottom bullet on the left here, Kirkland Lake Camp, compilation of opportunities post consolidation. No names given, but that could be one of the opportunities that I just discussed. Akasaba West is a small open pit that they're putting into production, and we have a small royalty on that asset as well. Yeah, sorry. So at the Canadian Malartic Mill, they will have excess capacity of 40,000 tons as of 2026 and later. And any material that's coming from outside the Malartic property is amenable to a 40-cent Canadian per ton milling fee. So in certain cases, I mean, we hope, this forward-looking statement, we hope that some of this material will come from a property on which we already have a royalty, and then potentially if it goes through that mill, then we would get a little bonus there as well. Lots of votes for Tintic. So this was an asset that was purchased from by Osisko Development out of private hands. They produced some gold last year, and we got payments of close to 200 gold equivalent ounces. And Osisko Bermuda purchased a 2.5% metal stream on the asset. It's located in Utah. And that's the picture of the portal. And now they've driven a ramp down to the level where they can access the Trixie deposit directly. So the location is in Utah. It's in the range of Bingham Canyon. Similar style of geology. There's been literally dozens of mines on the property. Most of them have been lead, zinc, silver deposits. And there's still some latent, there's some known bodies of mineralization, including Bergen, which has a fairly decent tonnage and grade as a base metal deposit. The existing resource, so the main reason Osisko Development was interested is the private company had intersected these bonanza grade intersections in mining. And this is the first resource that was completed on there. So measured and indicated resources at 28 grams per ton for 213,000 ounces, and inferred is 385,000 tons at 19.6 for 243. So this is the first resource. When we were looking at funding the project, we didn't have obviously this resource, but we had sort of an idea based on the information available under NDA what it could be, and it's this is really the first step. We see a ton of potential beyond this in terms of different styles of mineralization, but growing this and copy paste of this style of mineralization in other parts of the camp. So all of those resources are within this small red box. It's part of a really big system. They've really unlocked the geology in the area. Osisko's has very strong geological capabilities, and you can see sort of potential for looking for repeats of that style of mineralization. Also looking at the different fluid pathways along major faults, which are fairly well known now. And this also, similarly to Kirkland Lake, the limits of mining when people were active here was always sort of the base of the water table. The water table has been lowered. People are using the water for different sources, but also the technology to pump and access these zones has increased significantly. So those technical difficulties are sort of out of the way. And underneath these systems, this very high grade epithermal gold deposits, there's a heat engine which is driving that. There's some very obvious and substantial alteration halos at surface. People have drilled here in the past looking for the porphyry engine of these projects, but the understanding now of the different zonation of the alteration and the causative intrusions has grown, and we hope that Osisko Development will be able to test those theories very soon. So those are the producing assets, things that are growing in the background also, and we invested in several projects over the last few years, and I'll just talk about a few of them. So there's quite a few votes for Costa Fuego. This is a primarily listed in Australia. Hot Chili is the name of the company, located in Osisko state in Chile. And a fairly substantial resource, which is 725 million tons of 0.39 copper and 0.12 gold in the measured and indicated, and 200 million tons of slightly lower grade in the inferred category. So we purchased a 1% copper royalty and a 3% gold royalty on the asset for 15 million US. And since then, they've put out more technical information, so they updated the PEA. What we really liked about this project was its buildability. As Cashel mentioned, attracting good people is difficult. In Chile, there's a lot of competition, and if you can build a project that's lower elevation, closer to cities, it's quite a bit more attractive. So this project is close to the city of Vallenar. It's very close to a port. They already have an easement to access, to install a pipeline to bring water to the site. Another very critical feature of copper projects or mining in general in Chile is access to water. All of the testing is done with seawater, so the flotation and the small heap leaching project that's a tack on to this project was done with seawater, and power is also available nearby. So the current concept is mostly open pit mining at Productora. They've had that project for longer, and they've done a lot more of the baseline studies. And you can see the road turning north-south is the Pan American Highway. So on the other side of the highway is the Cordillera project, where we have these three pits. And in the most recent study, they've elected to use a block cave to access the higher grade portion of one of the Cordillera projects. So beyond the buildability of this project, we really like the exploration potential. The porphyry deposits are obviously occurring clusters. The Cordillera is more of a classic porphyry association, and they had already some fairly sexy targets in the area that when we were looking at the project. The revenue is mostly copper. I think it's 76% and 8% for gold. And this is the throughput. So this is the most recent preliminary economic assessment. So close to 80 to 100,000 tons of copper per year produced. And in terms of gold, it's 40 to 60,000 ounces of gold production per year. This is the timeline of what they're marketing in terms of getting to feasibility and beyond. So 2026 definitive feasibility study. Second half of next year in 2024, a preliminary assessment. And we like the team there. They're very responsible, doing all the right steps to make sure that the project is going to be on the right timeline for permitting and make it easy for whoever is going to build it to have all of the pieces in place. Another one that got a lot of votes is Marimaca. This is Very similar to Costa Fuego in many ways. It's in Chile, close to the coast. It's an oxide deposit, heap leach. So we purchased a 1% royalty over the deposit as well. And you can see was shocking to drive around here. It's so dry. There's nothing living there except for vultures just waiting for us to pass out. So in terms of permitting, nothing lives there but geologists looking for copper staining. Again, it's very close to the coast. Again, they're using seawater for the processing. This is actually a photo taken. You can see the coast from the site. There are power plants close to the site and that have a wastewater that they would like to get rid of. And for this management team, this is a very good solution. So they have some term sheets and agreements in place for the water, for the heap leach capacity of the project. The resource has grown significantly since we made our first investment. The soluble copper is a little bit misleading. Some of the difference between the total copper and the soluble copper is leachable. It just has a longer leach time. And this project has a very low strip ratio. In the previous study, they showed less than a 1-to-1 strip ratio. They recently got an investment from Mitsubishi. So this is a theme we see in a lot of our projects is soon after, or we provide an investment, we see corporate entities come in and give a separate stamp of approval on these projects. So they're well positioned to get through the studies and permitting going forward on this project. This is the timeline they've set out. So they've already engaged Osisko to do a feasibility study, looking to complete that in Q4 of 2023. Namdini is our most recent acquisition. So this is a 1% royalty that we purchased on the project. The project is located in Ghana, the northern part of Ghana. This is not where most of these giant mines are built. This is important because the country, which is a very strong democratic country, Ghana is the biggest gold producer in Africa. There's a lot of will to expand industrialization in the northern part of the country. And there's quite a lot of support politically to advance this project. So this was the old Cardinal Resources, which was an Aussie listed company. It was bought by Shandong. And so the company, the company is now in country is called Cardinal Namdini. Fairly substantial reserve here, 5.1 million ounces of proven and probable at 1.13 grams per ton. The feasibility that was published was done by Lycopodium, who is the premier consultant to do studies in Africa and build other projects. Shandong is not using Lycopodium for the EPCM on this. They're building it themselves in partnership with one other important industrial Chinese company in country. This is one cross-section showing the deposit. So in the reserve, the pit was actually designed mainly due to timing, but it was designed at $1,300 per ton per ounce gold. There's an obvious pushback on the mill there, so on the size of the pit. So we hope that that potential is shown. And the highest grade in the deposit is actually fairly decent, and there's some very low-grade underground mines in Ghana, so potentially there's an underground potential as well on this project. This is the histogram from the Cardinal study. So around 300,000 ounces throughout the life of mine. The first 3 years, it looks is closer to 1.1 million ounces. So one of our concerns was when we purchased this asset or when we were evaluating it is how much public information we would have to know how the asset is advancing. And we were surprised Shandong has a LinkedIn page for this project in particular, and they're putting out YouTube videos showing the advancement of the project. Additionally, they have an agreement with the local media that they can request at any time to have a press conference, and they would provide information on the assets in general. And we've also seen a press release recently where they've emphasized they expect to have first gold by the end of next year, 2024. Another project that we purchased in Africa. So we don't have a lot of Africa in our asset. This is one we bought from a package from Barrick. The operator is Shanta Gold, which operates 2 mines in Tanzania. They're not super well known in Canada. They're London listed. They purchased this asset. It had a PEA available at the time. They haven't updated that study. They've upgraded the resources and they're moving forward. And it's a 2% royalty located in Kenya. So the updated resources is 1.7 million ounces. This is a combined inferred and indicated. The highest grade deposit, which is Bushangala, is 11.5 grams per ton. So that's just a fraction of the deposit. So it's and then the PEA that was the historic PEA now had a 9-year life of mine. So the project is around Lake Victoria. There's some super world-class deposits that are in production in Tanzania. So Shanta Gold knows Africa well. They have 2 mines in operation in Tanzania, and you can see the size of the asset in the upper part of the slide there. So that's again in Kenya, and they like to compare the geology and the scale of the property they own to the Abitibi and Kalgoorlie in Western Australia. So Archean style greenstone belts and similar styles of mineralization. Massive property, 80 kilometers across, and they've reduced it to the parts that they like the most. Barrick had done a lot of good work, soil sampling, geophysics, and what they had found didn't meet their standard. And Shanta was very happy to take on the work of defining the resource and bringing it into the next phase of development. So this is a long section and a cross section showing Bushangala and Isulu. Again, very high grade, 10.6 grams per ton for the underground portion. They're progressively drilling out and bringing it to indicated with time, looking to get into feasibility level studies. They are also drilling off a deposit called Ramula, which is more of an open pit style deposit. And around Ramula, there's other targets which could feed that style of mill that they're envisioning for the project. This is a cross section of Ramula. They have so far 417,000 ounces of 2.4 grams per ton diluted and indicated, and a small portion that's also in inferred. And they liken this to the Lamaque deposit, where it's flat sheeted veins that are within a dioritic plug. So now we'll get into some of the high profile development assets. These are ones that we generally talk more about. And there's a few that I picked here that I wanted to cover. I checked Windfall, but I saw John's here, so I don't need to talk about it. Caribou got a lot of votes. You guys wanted to see an update on that. I can't say too much about it. I'll tell you what I can say. So we have a 5% royalty on the asset. It's owned by Osisko Development in BC. And the updated feasibility study, we have on average 8,000 GEOs per year once that gets into production. Obviously, a gigantic property, 80 kilometers of the right style of geology is a very good understanding of what are the controls on mineralization. And the part that's that you can see in the upper right corner in orange, all of the reserves and resources are within that area, which is in a very small box. So in terms of compactness of where the ounces occur, it's relatively tight, which means that in terms of development per unit ounce, is not as high as you would think, given the number of individual vein corridors that are available for the reserves and the resources. There's quite a large remaining resource that can be upgraded for the asset, so that obviously the feasibility study is only showing what has been drilled off to indicated resources. This is the development or the phased approach that was proposed in the feasibility study. So phase one is very low capex, $137 million to get to the first phase, and that's mostly because they're reusing a lot of the investment that was done previously. The QR mill, the portal is already started, and so they can get up and running at that low initial throughput, and then ramping up and building a flotation plant at the Caribou site itself, and then that concentrate gets driven to the Caribou, the QR mill. So that phase approach also provides, it's a lot easier to finance, obviously, but also provides a lot more de-risking of all the aspects of the project to make it far more attractive going forward. This is the current timeline in terms of permitting. So they've gone through some really important steps recently announced. So the EA certificate is in hand, and by Q2 next year, they'll have their application referral, and at that point, they'll be ready for the next phases. Corvette, this was a nice surprise for us. So I've as a resource estimation QP, I was forced to dabble into pegmatites the last time that they were hot. In the meantime, there were companies like Patriot Battery Mills that were trying to advance projects and were sitting on projects that and nobody cared about lithium, and they couldn't get funding to drill it out. We obtained a 2% royalty on this. This was originally within Virginia Gold Mines and the Bay James. We inherited several assets which were transferred into Osisko Development. This one has a little bit more of a complicated history, and we have a 2% royalty on it. And the resource, we'll talk about the resource in a minute. So it's located in the Bay James area. So this is people like to zoom way out when they're showing this area because it's fairly far from the urban areas of Quebec, but at the same time it has a lot of industrial strength. All Season Road, within 13 kilometers from the project, the company has indicated that they're going to provide all season access and a camp very shortly, and very high tension power lines running not too far from the project as well. So they've announced 109 million tons of 1.42% Li2O, which is a pretty outstanding result. We were happy to see that resource come out, and our coverage on that is between 85 and 95% of the resource. And the reason the range is high, you can sort of see what the coverage is. It might look like more, but some of the very best holes are in that little notch that were drilled there, frustratingly for us as we're trying to track the advancement of the project. So the Nova Zone is a very high grade portion, and there's a slug in the core of this dike, which has 2, 3, 4% lithium, which are going to drive the economics. So this is a zoom in. This is a press release from yesterday, and I like to sort of overlay and see what our coverage is, so you can see more clearly what's in and what's out. They continue to expand both east and west the asset. So it's the vast majority of the tonnage here is in a single dike. There are areas where it bifurcates as two separate dikes, but generally speaking, this is one body, which is super attractive in terms of mining efficiency and economics. We see some of these pegmatite deposits have trouble, and a lot of times it has to do with dilution. So the thicker, more continuous the deposits, it really reduces the risk in terms of production. This is a long section of the zone, including the Nova Zone in the center there, the super high grade portion of it. Very long and relatively continuous, obviously open at depth, and at the grades, especially for the Nova Zone style grades, those are probably amenable to underground mining at some point. But all of the resources, as they've described, are within a single pit. So this pit is actually partially within a lake, a relatively shallow lake. Patriot is quite forthcoming in talking about that and saying there's potential to put a dike and dewater the lake where they need to access this. But in parallel, they are discovering more dikes and other areas which are not associated with any surface water. This is their slide of a compilation of several pegmatite lithium deposits, and they're claiming that this is the largest in the Americas, and I think that's a fairly fair assessment of where they are, especially as they're expanding quickly the size of this resource. This is the timeline of what their expectation is. So permitting, looking to start already next year, 2024, and potential production, mine operation, they're showing at 2028 already. So in the Virginia package, so Virginia Gold was the owner of the Eleanor mine. They sold that mine to Goldcorp. They retained a royalty, and then they sold that royalty to Osisko Gold Royalties. And in that package came lots of properties. So this is a relatively out-of-date map, but all the yellow splotches you see here are properties that were in the hands of Osisko. Now they're owned by, the majority of them are owned by Osisko Development. And Osisko Development is doing multiple partnerships and JVs with other companies. So for reference, those are the Corvette properties. And many of these other properties have been partnered with either Brunswick Exploration, which is a company that's exploring and has discovered new pegmatite dikes on our properties. The properties are called Anatakau and Anatakau West. Loyal Lithium is another company. It's an Australian junior. So there have been several Australian companies that have come into the James Bay area, drawn by the success of Patriot Battery Metals. Loyal Lithium and also Cygnus is a separate JV company. So it's been crazy up there. Tons of helicopters flying over the James Bay doing exploration work, partially hampered by the series of fires. But we're excited to see the advancement of these projects. So in general, all of the companies that I described, so we have 2% on Patriot Battery Metals, but the three other companies, we have a 3% royalty on those. And Osisko Development has a certain number of rights on those JVs as well. Tocantinzinho TZ is a project in Brazil. So this was in Eldorado Gold for a long time. Eldorado was signaling to the market that they were looking to divest the asset. We purchased this from an individual. It's now 0.75% NSR royalty on the asset. They sold the asset to G Mining Ventures, that we know those folks fairly well. A lot of the founding members of the original Osisko are ex-Cambior, and that family is really well known within and quite respected as well within the Osisko family. And so they're advancing the project really well. This is an exception in the rule in terms of providing lots of updates on time, on budget. So far, their advancement is extremely impressive, how they're able to deliver on the expectation. And this will translate into something like 1,300 gold equivalent ounces per year for us over an initial 11-year mine life. Located in central Brazil, Brazil seems to be an increasingly attractive environment to build mines. With the return of Lulo, people were a little bit apprehensive on his business friendliness, but that hasn't. Seems like things are business as usual for these projects. And so they're looking to ramp up and be in production within start commercial production in second half of next year. So we'll be looking forward to the launching of that. It'll be around a 200,000 ounce per year producer. This is from their feasibility study. There are results at depth, so there's potential for a pushback on the existing pit area. and the property is pretty gigantic. So I've sketched out what our royalty covers. So they have a much larger property position than our royalty coverage, but you can see to the north and south, we're covering quite a big area. That scale bar on the bottom right is 5 kilometers. Windfall, John is here, so I won't talk about it. Not that I didn't know he was going to be here, but... and these are some of the assets which are usually in the back of our book and we don't generally talk about at all. So this might be names that you haven't seen us speak about in the past. Altar is run by a junior company called Aldebaran. It's the same folks that are behind Regulus Resources and had a lot of success in the market with several projects that have been de-risked and sold on into hands of majors. So we own a 1% NSR royalty on this project. It's located in Argentina, which is very on trend these days. It's a great neighborhood with lots of great projects being brought forward, and it has a massive resource already, measured and indicated resources of 1.2 billion tons of 0.47 copper equivalent. Again, great neighborhood. It's in San Juan province, and you can see all the majors are looking to get a toehold in the area. Obviously the Filo mining is the amazing discovery in Argentina, which is attracting a lot of the attention. They have as a strategic partner South 32, which currently owns 14.8% of Aldebaran. So this is the picture pre the most recent drill holes, and you can see the block model on the right showing the higher grade towards the bottom of those pits. Our royalty covers both Altar Central and Altar East. Those are the resource numbers, again, 1.2 billion tons, copper and gold, and a little bit of silver. But this is the image that really is striking. So they've been intersecting several hundreds or kilometers of mineralization. So 1,167 meters of 0.48% copper equivalent. So in the background, you see it's an IP survey, which is showing resistivity. And there's a nice big plug there. And usually you don't see such good correlation between mineralization and these surveys, but in this case, that big pink heart-shaped thing looks like it's delivering on its promise. So we're very excited about this one. We hope they continue to drill and get success. I think they just started the drill campaign once again here. Amalsar, this is a project that came in the Orion package. It has a storied history. We retained our rights so far. So the company was a publicly traded company, Lydian International. The asset is sitting within Osisko, Bermuda. If we take the last publicly available information on the feasibility study, this translates to around 8,000 gold equivalent ounces per year. So it's a silver stream and a gold stream and an offtake that we currently own on the asset. It's located in Armenia, which is a complicated place. So there was recently a war between Azerbaijan and Armenia. I won't pretend to know everything is understand really the complexities of the relationships in here, but it seems that the physical conflict is over, and now it's a question of whether how things are moving forward. Most of these men don't look so happy to be standing together, but we hope the worst is behind. They can find peace and set up a scenario where we can find stability in the region for the project. So this is the production profile that was in the most recent feasibility study. So we're talking around, it's a heap leach operation, around 200,000 ounces per year over a 13-year mine life. This is a 2019 study. So the project had been around 75% constructed. So this is some of the surface infrastructure, crushing capability, crushing facility at the top of the mountain. And then the heap leach is actually further down the mountain. So this is a conveyor belt, which is partially constructed. So Mike spends a lot of time, Mike Spencer from Osisko Bermuda, ensuring that this asset is as ready as possible for a restart. We're very hopeful that we find a good partner soon that can show the potential and bring this forward into a new producing asset for us. Grant, how am I doing on time? How much time do I have left? All right. All right. So Lamaque is, we have a 1% royalty basically over the Triangle deposit. So this is was the old Integra asset. It's been producing around 1,700 ounces per year by Eldorado Gold in Quebec. The reserve life brings them to 2025, 2026, but they've put out 2 PEAs on. One is the deepening, so in the yellow is lower Triangle, so it's just going lower than where they are. And the second one is the Ormac deposit, which is very close to a high-speed ramp that they have already installed. So they're drilling those, and hopefully they'll bring them into reserve in the next few years. But really the one that what I wanted to talk to you about is the more regional area. So we have a 2.5% royalty on the regional claims, which used to be the QMX claim. So I'll just show you. So those are the old QMX claims. There are a few historic resources on that, on Bonnefond and Bevcon. And Eldorado is working in the circle primarily in the oval around Ferderber, which has a mill in that area. They own a mill called Orbel, which has a 1,400 ton per day capacity, and they're drilling 44 kilometers of drilling. And it's not clear where exactly that drilling is going to take place, but some of it is going to be spent on that regional land package that we have a 2.5% royalty on. Spring Valley, this is a long forgotten asset. It was in a partnership between Midas Gold and Barrick. Unfortunately, the Barrick didn't go bankrupt. Midas went into some difficulty, and the asset was taken by Waterton. We purchased a royalty or a series of royalties from an individual on the asset. And the old, I'll go to the resources. So this is in Nevada. It's proposed as a heap leaching project. So we were able to find in February 2023, they applied for a series of permits. So we don't have perfect information on what's happening there. Again, this is inside Waterton. But there's lots of clues on what's what. So I've actually traced onto this engineering layout map what our royalty coverage is. So we have 3.5 over the center and 2% in the upper right. And you can see the now historic resource in the bottom right. That's Midas's resource, showing a measured and indicated of 200 million tons of 0.6 grams per ton for 4.1 million ounces, and a small inferred resource as well. And if you read the description, they don't give the tonnage and grade and the plan specifically for Spring Valley in the permitting documents, but they do give tonnage of ore, tonnage of waste, and it's pretty close to a match once you correct for imperial versus metric and everything else. And the strip ratio comes out to something like 3-1 overall. So again, doing some overlay magic to try to figure out what's what. So this is an old map showing the grade thickness from the old work by Midas, and then overlaying it onto the new engineering studies. So you can see most of the core of the mineralization is sitting within our 3.5 and 2% NSR. And there is a 500,000 ounce, I don't know what you call it, not a penalty, but it doesn't start paying until the first 500,000 ounces on the main claim, the 3.5%. Just to show the level of engineering done, so this is a heap leach pad and the collection ponds. Waterton has done a lot of work here to bring forward and figure out the engineering details required on this asset. So we hope that it ends up soon in the hands of producing issuer or somebody keen to work on the next project, in which case we can unlock that value. So that's all the slides. thank you for your patience. I think we can go on to question time. There's lots of votes that were tabulated that didn't make it to the list, but I'm happy if you want to maybe start with the assets that we did talk about, and then we can maybe answer some questions on things that we weren't selected. Yeah.
In your portfolio here, are there any, you got lots, so are there any that are non-core? Does this core that lithium?
Great question. We get, every time we get approached to ask us if we want to sell a royalty, it's usually because somebody has information that makes the asset more valuable than it is. And we usually answer, we're not in the business of selling royalties. In the best case scenario, and the problem is with these lithium assets is that it depends on what price you assume. So that asset can have a huge range of potential results for us. I think we'll let Jason answer that question. Anything is negotiable, but our new CEO definitely will have an opinion. Yeah, I don't want to sell royalties, so the price would have to be quite good. So, anything else? Yeah.
If you were to just maybe take a step back, right, and look at this sort of portfolio, right? There's a lot of information given on geology. Which are the ones that you think may have the exploration upside that is the least appreciated by the market itself?
I think John is gonna yeah, John is gonna interrupt me first. I think that package has a lot to deliver. Once that platform is built at Windfall, copy paste what they found at depth is huge. That land package is massive. It's not super easy to work there. They've done a lot of great work, but if you look at the greater package, it's relatively small. I think John's done a good job of explaining to the market the exploration potential. I would say the one that I'm most excited about is Kirkland Lake. Smart group, big land package, multiple zones where they can find more mineralization, and mining companies get stuck in the day-to-day of what they're doing, and Macassa was always super high grade, and how are we going to fill that mill? And we need to drill like the next step beyond where we are. And I think Agnico is going to zoom out, look at the greater package and unlock that value. And now that they have this latent mill capacity in Quebec, once that small piece of infrastructure is built there, I think that can unlock a lot. And outside of that Macassa, where it's drilled to 2.5 kilometers, it's a very thin layer of testing that was done there. So yeah, that would be one that I'm most excited about. If that's it, going once. We're around. We're happy to answer any questions. I have Matt Quigley, who works with me on the evaluation side and the audits. He's a mining engineer. Please stop us and ask us questions, and we can do our best to fill you in. Thank you.